everyone, this is Calvin Russell, CEO and founder of 850 Club Credit Consultation. Hope everyone's doing well today. Today we're going to talk about how can you find out what mortgage rates are or pre-approve for a mortgage without affecting your credit score. Let's go straight into it. So for those who don't know, anytime you're rate shopping for a mortgage, you have 30 to 45 days to essentially let lenders run your credit and find out what you qualify for. Here's the deal. Instead of doing that, which a lot of people normally do, instead of going that route, you honestly do better knowing what your mortgage scores are prior to reaching out to the lenders, okay? First off, let's break down a few basics. Number one, with FHA, FHAs can go as low as 520, but most banks are going to go as low as 580, okay? Now, just because they go as low as 580 in most cases doesn't necessarily mean you're going to get the best available interest rate, okay? These are questions you want to ask the bank prior to. In most cases, if you're looking for FHA, the better rates are going to be at 620 and above. In most cases, you're going to get what they call the market rate. The market rate is usually the best rate that you can get. It's standard, it's set, and that's where you're going to be at 620. Now, keep in mind, the time that you do the pre-approval, that can vary the rates by the time that you actually close upon your home or lock in the rate, okay? So when you essentially are doing this, you have a certain period of time. Most rate locks last for about 30 days. If any lender tells you that you need, that their rate locks last a little bit longer, they're probably charging you a fee on the back end to stretch that loan, that rate for a certain period of time. I'll give you an example. We have a client who's going through new construction. She's under contract now, but she doesn't close until October. Who knows what that rate is going to be? Now, can she get her rate now and then lock it in? Absolutely. But a rate lock can kind of be expensive. Almost $500 for every week. We're talking $500 for every 5 to 7 days just to hold that rate in. All right. So if you feel like it's worth it, that amount of money that you spend trying to hold that, you may as well just go ahead and use that to buy down the points if you can. And that's where you're talking about buying down the interest rate if your lender allows you to do so. But most of the market rates are going to be at 620 when going with FHA. Now, if you're going conventional, most of those market rates are usually going to be around about 680. Some cases, depending on your lender, may be 650, but most cases are going to be 680. This is usually when people are talking about rate shopping in general, when they're shopping around for a conventional loan. If this is the case, that's fine. Just go to myfico.com and then just get any plan that they have, the advanced plan. You want to get one of their monthly plans, so either their advanced plan or their premium plan. The advanced is $30 a month. The other one is $40 a month. At the time of this video, the names may change, but either way, you're either seeing all of your mortgage scores every quarter, that's usually $30 a month, or you're seeing all of your scores in general, including your mortgage scores, every month, okay? So every quarter, or you can do it every month, and there's a $10 a month difference if you want to be updated monthly or if you want to be updated every quarter. So that's up to you. That said, that's essentially how you do it. So now you can go ahead and call, whatever bank or lender you want to talk to and say, hey, what type of interest rates do you guys have for these FICO mortgage scores? Now, for those who don't know, they go by your middle score. So you go to myfico.com, you create the account, and then you look at your, you go to the report and you go to the scores and you go to the mortgage section, and then you'll see where your scores are. You're going to drop the lowest, you're going to drop the highest, and that's going to be your middle mortgage score. That's the one that they're going to go by. So when you're calling these lenders and say, hey, what type of rate can I get for this mortgage score? They'll let you know. Now, of course, they can't guarantee anything. Why is that? Simply because they haven't seen the full credit report. Why does that matter? They want to see what your DTI is. Sometimes that can affect certain things as well too. Sometimes you're thinking you can get a conventional, but you can't because of your student loan balance or something like that. So a lot of factors will go into play. But if you want to get a general idea of where you are without necessarily having to give everyone your social, find out what your score is, start calling around, tell them what you have. They will help you. If they don't want to help you, just call that same bank and speak to a different person, or another bank. Like, for example, if it's Bank of America, just call another branch. Someone will help you out. Is it a little bit longer this way? It is, but most of the rates are about the same anyway. But you can at least say, hey, what kind of programs do you all have for first-time home buyers? Or I'm a service industry worker. I'm a healthcare worker. What type of grants and incentives do you have that are available? It is there for you. Okay, so if you like this video, like it. You want to share it, and as always, be sure to subscribe, as we have nothing but great content on the way. Thank you all so much. Have a great day.